Eric Muathe with Muathe.com for the weekend of February 27th and February 28th, 2016. Let's take a look at markets here. Take a look at how Asian market closed, and we can see pretty much a mixed bag, but for the most part, positive close. If you are to take one direction, either slightly unchanged or positive for the major markets in Asia. Take a look at European markets at the close of Friday, and we see that they were up about 1.1 to 2% on the major averages there. We take a look at the Americas, and we can see here that on Friday's session, Brazil is slightly down about 1%, and the TSX is up about 1%, and with about, let's call it about an hour and a half before the close of the US market. US markets are pretty much slightly down or unchanged. We see that crude oil is down about 1% at the present time. Gold is down about 1.3. So let's go to the charts. So let's begin by taking a look at the Australian market, which was down this week. And we can see that it's coming back to test the RSI top line on the weekly RSI. If you draw the line just like that, a very simple resistance line that is coming in play right now. So until such a time as it can move above that level, one can assume that it should continue to struggle. So that's one view, and also coming back and showing resistance at the 10-week moving average there suggests that net that this is a market that could struggle. And the other view comes back to the previous break level on the weekly RSI. So we can draw a line somewhere around there, which is slightly below the 50 level, and that should be giving us sell signals every time we see resistance. And we can test this theory because ever since we've come here and hit that level, all these have been resistance points as the market hit the red line and also the area around the 50. Here we went above 50 RSI level on the weekly with uniform action and back below it for that major sell signal short term, and so we are still below that red line. So we got two lines, topside resistance on this red line, and we can also see that the RSI on the weekly, both of them showing that net this market should continue to struggle. And actually, if you take a look at the recent weekly closing low here, which happens to be at 4816.60, so the recent 2016 weekly closing low, we can use that as a trigger point. Should the market come and break through that, that would be a sign that the market is poised to go lower. Keep in mind that net on the monthly chart, we are still showing that the markets are pointing down on the monthly as the RSI continues to trade close to 3-year lows, and the MACDs are also trading at 3-year lows. And in fact, the main MACD is at 3-year lows and also moving below zero for the first time in more than 3 years. So the monthly continues to be bearish as far as the Australian market is concerned. So at the end of last week, during the market analysis video that I did, we talked about that the monthly charts were still bearish, and that remains to be true on most of the markets worldwide. Take a look at Hong Kong, which, as you can see here on the monthly chart, we are still seeing the market trading at 3-year lows on the RSI and also on the monthly MACDs. And the indication here is that net we are still looking at very bearish markets with potential for lower prices in the coming month or months, as long as this negative looking chart continues to be the case. If you take a look at the daily, we can see that the daily is coming back and showing resistance. Also short term, check the line connecting the RSI highs. Should look something like connecting the highs there, touching that double top there, and recently we hit that level, and also which happens to be resistance around the 50 RSI level on the daily. So net you can see that the 50-day moving average is pointing down. So markets are still looking bearish, and also we came back to test this break point, and the break point that began the move coming in 2016 there, that break point has been tested once before here for the highs there, and again recently for the highs there. So you can see that the monthlies are bearish, and the dailies also right now are showing that this is where markets can continue trending lower as long as they are showing resistance A on this red line, which was the break for 2016, and also as long as the market has yet to move above this declining RSI line. So bulls would like to see the market take out those two lines before they can really start being excited about the potential for upside. Net, what I'm saying here is net, we are looking at markets that are still pointing down. If you look at the KOSPI, we can see that the RSI is showing potential for weekly RSI resistance there. So as long as the market stays below that blue line connecting recent RSI highs, this is a market that should continue seeing lower prices. And of course, if the market is to break out or at least move higher, it needs to move above that blue line. On the daily, for the KOSPI, we can see that it is coming back and showing that it is testing this recent line here connecting RSI highs. We haven't moved above that line significantly, so I think we're still looking at a market that could struggle. Here we are playing around with the declining 50-day moving average. So resistance on both price on the 50-day moving average, any resistance there, and resistance on this declining RSI line might suggest lower prices. Otherwise, bulls would like to see the market move above the 50-day moving average and also move above this declining RSI top line. We can see that we are coming back to test a recent break level. Can draw a line around there. You can see as of late November 2015, that was the high on the red line there for late December 2015. And recently we hit that with a double top for the highs there. And now we are struggling to hold above that. Net, we can also see that the monthly chart still continues to be playing around with the 3-year lows on the RSI. So we are still net bearish here and also on the MACDs. Monthly charts worldwide, for the most part, do look like they are still giving us that major sell signal. So the risk continues to be, in my opinion, lower until we can clear recent RSI resistance levels. If we take a look at China's daily chart, we can see the short term. We came and hit this topside resistance line here, and also we were rejected at the 50 RSI level. So that's one sell signal short term, down 6% on Thursday. And we can also see that we came back to test the recent break level coming into 2016. So this break right there began this move, and the market hasn't been back there. We can draw a line from there. You can see that it hit those two lines over the last week or so and is pulling back. So net, this market looks down, in my opinion. The level to watch on the weekly is the recent weekly closing low here. If the market breaks through that, so if the market breaks through 2737.60, anything below that would be a fresh break and the market should be in trouble. So watch 2737.60. If it cracks through that, it's going to be a fresh break, suggesting even lower prices. If we take a look at Japan, we can see that after breaking through 2015's monthly closing low, we are still looking down. So that's still a bearish monthly chart. RSI here already cracked to 3-year lows and also moved below 50, which might explain the recent 2-month slide. And the MACDs, or at least one of the MACDs, continues to be down to 3-year lows and also trading below zero. So here the monthly chart continues to be bearish, irrespective of day-to-day action. And if we take a look at a 5-year weekly chart for the Japanese market, we can see here a nice bullish crossover between, let's say, the 8-week, in fact, let's just say between the 13-week moving average and the 34-week moving average. So bullish crossover here led to a nice multi-month rally here. Another crossover which was bullish between the 13-week and the 34-week moving average, which led to a multi-month move higher. And now we are looking at a bearish crossover between the 13-week and the 34-week moving average, suggesting that in the coming months, the chances are that the markets generally are going to be pointing down. So that's one view. The other view is coming back to test the previous support line on the weekly RSI, something that we've been talking about. It's a simple line going back to the lows of 2011. Draw it just there. you can see that the market held support here for the lows there in 2011, uniform activity support for the lows there, uniform activity support on the green line for the lows there. Again, the same thing here for those lows. We touched that during these lows here. We even came close here for the lows right there. Again, we touched that for the lows of late 2015 or about August 2015 for the lows there. But now the problem is, for the first time in about 4 or 5 years, we are actually trading below the green line. So which might suggest that we are now in a different phase of this market, which generally seems and is pointing to markets behaving negatively. And so we should not be too surprised if markets continue trading down. In fact, this is not the only market that looks like it is changing its behavior. We can see here for the Nifty over the last couple of years, we had a nice, strong leadership bull market. And that happened throughout the phase when the RSI generally was trading above this level here, or using this green line for support. And just like we saw with the Japanese market, all these lows came on the green line for successful rebounds. And even here, at least you got a bounce out of that. And what I'm getting at here is we are trading now with the market below that green line, which is concern for those who would like to see the market go higher, because we are trading below here. And also we can see that there's now some type of resistance on the top side. We haven't moved above this line connecting RSI highs over the last couple of weeks. In fact, if you take a look at a 2-year weekly, the previous chart was a 5-year weekly, we can see that take the highs here. Let's draw a simple straight line. I think the theory here is, as long as the market is trading below this very simple line, as long as the market is below this line here, the chances of markets making fresh lows are very high. Now, something that the Nifty did last week that was not good, if you're a bull, is we've had 2 weeks of rest since recording this high. That is the minimum rest period. So now in the coming week, if and when the Nifty moves above 6980.95, which happens to be 2016's weekly closing low, any move below 6980.95 would be a fresh weekly break, and that would suggest even lower momentum to the downside. It is, I can equate this to this period here where we broke through and we haven't looked back. So we have to watch out, because if it breaks that level again, any break of that level, let me just write it down here, 6980.95, any break of that level would suggest that the risk has now continues to be elevated to the downside. The monthly RSI, as we've been talking over the last couple of months, continues to trade at 3-year lows, which is why the market has not been acting well, in my opinion, of course. And we can see here that the MACDs also have been bearish, trading at 3-year lows and also trading below 0. So the Nifty has been a question mark, and we continue to see that it is struggling. If we take a look at the daily, we can clearly see that we need to take out this recent RSI high line even before we can start to get any type of relief rally. It's a very simple line. If the market has strength, it needs to take out that line. If you take a look at the hourly also, so that was the daily. Take a look at the hourly. We can see that we had been talking about resistance on this level here since this recent break coming into December, or coming into January, I should say, that the market's been struggling to hold above that line there. And that has worked very well. Resistance here for the highs of early February, and resistance here over the last week. So I don't see any reason on this chart, honestly, for these markets to move higher. Now, I want to show you one other argument, which, because we are coming close to the end of February, this could be what the market is trying to do. Of course, we don't know. What we do know is this is where, on a long-term monthly view going back to 1990, this is where the Nifty has been finding major lows. Major low here in 2011, early 2012, Here we had uniform activity below the green line, back above it for the lows of 08, 09. And even off the lows here of late to mid, let's call it 2003, the market hit that level and moved higher. Even the lows of 98, 99 came on this line. And the lows of 97 and 96 all came on this line. So if in the coming month and months, if we can bounce on this green line and point upwards, maybe, just maybe, that's where the market stops going down. Of course, for now, I think net, the market continues to be bearish in my opinion, until we can see the market be positive for the month and show potential for finding support on this long-term support line. Now, this long-term support line just happens to be at about 38.2 on the monthly RSI chart. If you take a look at the South African market by way of the Dow Jones South African Stock Market Index, if you take RSI top side, you can see that we are coming back and showing resistance right now on the weekly RSI, just like we've seen in other markets. Take a look at the daily for the South African market, and we can also see that it is still forming a wedge. If you draw it this way, for the bottom side support, and then the top side is coming in play like that. So pretty much seems like the market is going to have to decide whether it wants to break out short term or whether it wants to break down, because we are coming closer and closer to the conclusion of that wedge. Whichever way it picks might be the direction for the next swing trade. If we take a look at the FTSE, had a nice gain on Friday, up 1.38%, but it is not really moving out of a range. You can see that this topside RSI resistance, as we discussed last week. So that's becoming a problem. Until the market can clear that line to the upside, you can assume that it's going to struggle around here, maybe even pull back. And also there's another line which has been recent RSI resistance coming from this level here. So since this break here, which happens to be this break right there in April, which was off the highs there, the market has generally been struggling to hold above the red line, with all these highs coming on the red line. So right now we ended the week with the market showing resistance again, where on the very same red line. So clearly, until we can clear those two lines, the red line and the blue line, one has to assume that if we show resistance, that the next swing trade is down. And of course, market bulls would like the market to change its behavior and break out. So until we see a breakout, we have to assume that this market is suspect and probably still looking to go lower. Take a look at the weekly for the FTSE. And if you take a look at the line where it's been struggling, which is this break line here. And where does that line come from? That line comes from this break. So the break there in August led to this major pullback or plunge. And since then, the market has been unable to hold above the red line. Every time it tries to move higher, the red line has been a problem. So for now, until we can clear that red line with some convincing action, we have to assume that it could easily become a stall point again. Keep in mind that on the monthly, we are still, we are slightly positive for the month, which is good. But the risk is, should we again move back to fresh monthly lows on the 3-year monthly chart, that will still be bearish. So it depends. In the coming month, if the market can build on this monthly gain and continue moving higher, and it can build on this support line here, that could be a good way to start, correcting some of this major drop. But I think if you're a neutral, the risk continues to be that the market slides to fresh lows again. That's the real risk. And also the risk has always been for lower prices ever since the RSI moved to 3-year lows on the monthly chart. So the risk, in my opinion, still continues to be down, with a slight chance of hope here that the market is holding above 2015's monthly closing low right there. And so the level to watch here is 61.61. I hope that. Let me just write that again. So 6,061 0.61, which happens to be this monthly closing low for 2015. If it can hold above that level, maybe it starts correcting itself, but if it cracks back below 6061.61, then that's going to be a fresh monthly break. So, we can watch this for the following month for there to be either some type of improvement. Otherwise, if we crack below this number, then the markets are back to their 2016 downwards direction. If you take a look at the French market, the French CAC 40, draw a line connecting RSI highs, you can see we are coming back here to test that resistance line. Anything below that blue line suggests that markets still pull back. We take a look at the daily for the French market, and again we see that it is still also coming back to test this break of late 2015. So this break on the daily there brought the market off those levels, and we can draw a line from there. Every time we hit that red line, which so happens to be around RSI 50, we make a major, or at least a short-term high, not major, but short-term high there for the resistance. And now we are still showing that this could easily be resistance. So as long as the market is trading below this red line, one can still expect that with the market also trading below a declining 50-day moving average, really you have to assume that here markets are still pointing lower because of A, RSI resistance, and also the fact that we are trading below a downward steeply sloping 50-day moving average. I hope that makes sense. If we take a look at the 5-year weekly chart for the German market, just like the other markets we've seen on a 5-year weekly, the German market needed to be above this red line, or this green line, excuse me. This is where it's been finding support over the last 5 years or so. Right now it looks like this is becoming resistance line. So for the first time in many years, it seems like now we are more and more trading below the green line, which is pretty much a sign of a market that is going to struggle. If we take a look at the weekly, we can see that the recent weekly closing low right there for 2016 can be used as a trigger point to consider the market as having more downside momentum. So the level to watch there is 8967.51, which is 2016's weekly closing low. Should the market crack through that, that's going to be a fresh momentum break, suggesting even lower prices. Now keep in mind why I say that is because we are still looking at the MACDs and the RSIs on a 3-year monthly chart, still pointing to fresh 3-year lows. So the risk continues here that the monthly charts are telling us that the path of least resistance for these markets continue to be to the downside until we see some monthly improvement on a month-to-month basis, something we haven't seen for the last 2-3 months. Let's take a look at the Canadian market, and we begin by taking a look at the weekly. Here, with about 1 hour to go before Friday's close, we can see that the line we've been watching for resistance connecting RSI highs, we just draw a line, simple line. And right now we are still playing around with that resistance line. For this market to move higher, it needs to reclaim the level above the blue line. Otherwise, I think we are still pointing down in terms of momentum. Don't forget that the monthly still continues to be pointing down with the risk of here adding on to 3-year lows on the monthly RSI and also 3-year lows on the MACD. So net month to month, the market still remains with the risk of much lower prices. Why? Because the monthly charts have not improved. In fact, if you take a look at the daily for the TSX, we can see just like other markets, it is coming back to test the recent RSI break. You can see RSI break here in April 2015, and we've come off the highs. We hit that twice for the highs there. We hit that in December or late February for the highs there, and over the last couple of weeks we've hit that here for the highs there, came close there for the highs, and now same thing. So as long as the market is below the red line, we should assume that net this market is gonna potentially have to see lower prices. If we take a look at the hourly, we can see that this is the high coming into about December, beginning of December. Actually, let's take this break here. So the break in late December, right there, that RSI break brought the market off this high. We haven't been back to those levels, so that's a relatively serious break short term. We can draw a line from there. Every time we break through that line or break a trend on that line, we have a pullback. So there was resistance there coming off the highs there, and now we broke through here over the last couple of days here, and now we hit that level as of Friday. So as we end the week, looks like we are still showing hourly resistance on that chart. Let's take a look at the Brazilian market. If you take a look at the Brazilian market from a 1-year daily, just want to show you that it still shows resistance, just like we've seen in other markets on the weekly RSI. So as long as the market is showing resistance on the blue line there, we should expect lower prices short term. So the weekly, that's the weekly. Take a look at the daily. The daily did show recent resistance coming back to test this breakpoint. Clear breakpoint there in May for the highs there. We can draw a line from that level there, and that line should come in play in the current market. You can see that right there. If you take the area where the market hit that line with uniform activity, you got a short-term high right there, came close here for the highs there, and over the last week or so we've hit that level. So that was clear resistance. And in fact, if you take the RSI high, connect them to the highs recently, you can draw a line that connects nicely with the highs there, touching that high and also that high there, which is this point here. So day to day, week to week, I still suggest that this market is telling us the market should continue struggling. And don't forget that on the monthly chart, net, we are still trying to improve on the monthly chart, but the RSI is still close to 3-year lows. So the risk is maybe in the coming month, it could easily break to fresh lows. So the risk is still there for lower prices. MACDs continue to be playing around with either support or break in the coming month, and the main MACD is trading at 3-year lows. So irrespective of what we see, net, the risk is still down in my opinion. Let's conclude with the S&P 500. Simply here we are trying to hold or test a declining 50-day moving average, and also we are coming back to test this line of resistance that we've been watching, and right now the market is a little bit struggling to hold above that level. We shall see. Otherwise, check out part 1 of my US market analysis. If you want some in-depth look at US markets, check out part 1 of this weekend's US market analysis. This is Eric Muadh, muadh.com. Wish you a great weekend. Otherwise, see you next week when I do the next world market analysis. I am out. Peace and blessings. E-A-C-S.